Hello traders, David here, and I want to talk to you about a common situation we have as traders, which is popping up in the markets right now as the S&P 500 came yesterday within pennies of 5,000. But we're also at the same time getting lots of warning signs flashing. So let's dig into the charts and I'll show you what I'm talking about and how to deal with this situation where we often have multiple competing ideas that we have to keep in our heads at the same time. You can see here, right, we got to 49.99 and 89 cents here on Wednesday. And we backed off a little since then, and here Thursday morning backing off a little more. But what I want to talk about is this idea that clearly the trend is up. It's been up since October of last year. You can make the argument that it's up since October of the year before. But one of the things that we're seeing, and this is a common warning of a longer term top, is that cumulative breadth, this blue line, is well below where it was at the late 2021 highs and still also below where it was here at the early 2022 highs. This cumulative breadth divergence could be cured if we keep heading back up. But until then, it is a warning. And it's not the only warning. This is a long-term sort of warning. We've got short-term warnings as this move up to near 5,000 has brought the index to right up against the 3 ATR Keltner channel. We've got a moving average of the put-call ratio, which is low. We've got a CBOE skew index, which is high. These are all warning signs. But one of the things that we often have to do as traders is keep multiple competing ideas in our heads at the same time. And in this case, those warning signs are competing with this notion that the trend is up, right? Elliott Wave tells us that 5 wave moves, like what we see up from the January low, 1, 2, 3, 4, 5, are in the direction of trend. We already know the trend is up, but so long as these trend moves unfold to the upside and the counter trend moves like this one unfold to the downside, the trend will continue to be up. So what do we do in here when the warning signs, the ones that we've looked at, and as I said, they keep piling up. We've got tons of warning signs. We can throw into the mix the possibility, but certainly not the inevitability that a larger 1, 2, 3, 4, 5 wave move up from October could be done, and that could lead to a large pullback. Now, notice I've said could a bunch of times in here. And what we have to recognize is that unless or until something breaks on a larger degree basis, that would be this swing low from about a week ago down here at 48.50 and the voodoo skyline. There's also a more important voodoo tree line at 47.87, right? Those are our longer term risk off levels that are going to start to suggest that all of this move up from October could be done, and we have a larger reset lower before continuing up. Meanwhile, on a short-term basis, there's some short-term risk off levels that we can watch, right? Whether that's going to be kind of the low from the congestion earlier this week, or for more twitchy traders, some of these swing lows from intraday yesterday. But unless something breaks, this is a situation where you want to ride the trend as it continues. And the other thing that we know is that if any pullback is going to grow larger, we're going to see a change to that behavior that we've talked about. These 5 wave moves to the upside and 3 wave moves down are going to give way to 1, 2, 3, 4, 5 wave moves to the upside and 3 wave bounces. So the challenge here is to make sure that you know the time frame of your trade, know what size break knocks you out, and then just ride this thing as long as the trend remains up until something breaks. This is not in a spot where we've got all these warnings, the place where I want to add new exposure, but we're going to ride the trend until it ends. So I hope you found that useful as a discussion of how we can keep these competing ideas in our head at the same time and not get totally messed up. And I will see you all again soon.